Hey guys, so we're going to talk about in this episode the difference between swing trading and scalping. It's kind of cut and dry, it's pretty simple, it's nothing that you really need to think hard on. It's basically just a time frame that allows you to trade based on your availability, really. So first and most important thing is you need to understand and identify what your schedule is like. If you have a career and you work a lot, if you have kids and wife, family, dogs, and all of that wonderful stuff, then you may want to consider swing trading. And swing trades look at higher time frames and they hold an asset for a couple days, maybe a week or 2 weeks or so. To compensate for their busy lifestyle, and they're not worried about smaller time frame trends. They're looking at bigger picture overall trends. And vice versa, scalping is if you have a little bit more time on your hands to sit in front of a screen and get in and out for those quick profits. You don't really care about the direction, overall direction, either way, because you're just jumping in and out, maybe once or twice, multiple times a day in various assets, and just scalping for smaller amounts of money that just add up over time. So that's really the main difference there. So if I am a swing trader here, for example, let's look at this 12-hour chart, or actually let's go out to a week. Let's go out to a week. Okay, so if you kind of have an idea or the understanding of the basics of charts and what these candles mean from some of the previous lessons, and let's say that you were a swing trader, okay, and we kind of reached this point right here where you've identified, based on these candle patterns that we talked about in a previous episode here, that this looks like the selling is kind of dried up here. It looks like we may be heading into a reversal. So if you're a swing trader, let me just pull out my little tool here to create some little boxes, some chat patterns. And you see a pattern like this, and you're okay. Well, this looks like the selling has kind of dried up. Let me go ahead and buy in here. So you are buying off of a weekly time frame. So that means each one of these candles, mind you, is 1 week long. Okay, so you are buying this with the intent to hold for multiple weeks, months on end. Okay, so in this particular case, if you were a swing trader and you had bought down here, all right, well, I'm going to be busy. Say you work offshore, you're an offshore driller or something, and you know you're going to be offshore for 2, 3 months or something, but you identified a good pattern down here to place a buy, and you plan on holding for a few weeks to a few months. Let's say over that course of time, well, you have 319% gain of profit. That's if you sold up here at the top of this wick. Now, if you remember what wicks are from the previous lesson, then you may not have sold up there. Let's just say, oh, you sold down here at these candle tops right here. So you still got 250% profit over the course of a few months. And that's good, and that's good. You're happy. You're not worried about what happens in all of these candles inside each of these candles on lower time frames. You're holding for a greater period of time, and you're getting the bigger portion of the trend, so you're not risking yourself losing money on a bad scalp play on lower time frames. So you can look at weekly charts if you're a swing trader for overall trend, overall direction, and then we can let's say zoom into the daily chart for a little bit better entries and better exits. So let's say that you don't want to hold. See, this is from, oh, let's just say from February to July. That's a really long time to hold. That's several months. Well, it's not really long time, but it's a fair amount of time. And let's say you want to kind of capitalize on some more profit than that. Okay, so you're a swing trader, and let's say you see some not so pretty selling up here. So let's say that, okay, so Okay, so we're going to lock in about 150%, 160% profit here in a much shorter span. And then we notice some selling going on, and then we kind of bottomed out right here as we're not continuing down. Okay, so let's say you want to open another position for another swing trade. And again, we are now on the daily time frame, so each one of these candles is now daily. Okay, so you notice the same pattern here from our candlestick lesson, and you notice that these are putting in some pretty good buying opportunities. So now let's say you want to rebuy this 163% position right here, and you bought it all back right here. So now let's say you held it for, let's say this is June going into July. So you held this for about another month for another month-long swing trade. Okay, so let's just say for this example, you put, let's say you put $1,000 right in there at the bottom there, just for math purposes, so to speak, to kind of show you how you can capitalize gains even swing trading. Okay, so let's say you sold up here for 163%. All right, so up here, 163%, you now have $2,630. Okay, now let's say you rebought all of that back down here at this bottom here to open up another swing trade position. So you took all your profit that you sold up here and you put it all back in down here at this rebuy down here. Okay, now let's say that we swing traded this again, we held for another month, and we captured another 70% profits on top of that. Okay, so another 70% profits on top of our total profits from our first swing trade comes out to a total of $4,471. Over the span of, let's see, this is March to July, so about, a couple months. Now, if you were playing off of that weekly chart for a swing trade and you still bought down here and you sold it up here for 239%, roughly that same price. Well, let's just make that even right there. Okay, so let's say you purchased that at the same price, and you played it all the way up to here, but you didn't sell in this middle zone, so you held it for a longer swing trade, which is perfectly fine. So this same amount of money that you invested in, 22.33. Sorry, I had to get my calculator out here. Okay, so this same amount of money from this buy-in here to this same top, only you didn't sell in this middle area here. You swing traded it all the way for that 3 or 4 month hold there at the bottom, would have brought you 2,233% profit or dollars, which is perfectly fine. There's nothing at all wrong with that. I think my math is off there. Hold on, guys. 1,000 times 233%. Yep, I knew that was off. That's supposed to be 3,000. Okay, so this is the profit plus our initial investment. The same with here. So you can see there's about $1,100 difference catching 2 different swing trades in this same period of time. So it really kind of just depends on what your availability is. If you're going to be if you don't care to hold it for a few months and it looks like it's a good uptrend, perfectly fine. Or if you have some decent amount of time on your hands and you're fine holding for a month or two, you want to come back and check it. You want to take some profit up here, and then you check it. This looks like about a month, 3 weeks difference in between, and then you rebuy and you sell it at the top. So you can compound your gains that way. So this is swing trading, And you can play this on multiple different time frames because as there are going to be multiple buying and selling opportunities on even these higher time frames to maximize your potential, maximize your profits and gains. So let's remove all of this. Now the difference between swing trading, oh actually hold on, let me do something here. So if you're swing trading, alright, so let's say you bought here and you sold here as a swing trader. Now for scalping, scalping is on much lower time frames, usually below, I want to say below the 2 hour time frame. You can get into day trading here on these intermediate time frames between the 4 hours and 8 hours. Day trading, you might make one or two trades a day. Scalping, you are an aggressive trader. You trade on much lower time frames. And it's also potentially a lot riskier. So if you're scalping, then you're going to play all of these waves as much as you can. You're going to take that same $1,000 from here and you're going to flip and flip and flip and flip and flip. Now your gains may be smaller, so you may catch 20% there, and then you sold, and then you catch this dump, and then you rebuy there, and then you sold up here for another 28%, and then you identified some patterns. Oh, this looks like some accumulation. You might have some bullish candle patterns in there. And let's say you're going to rebuy here, and then let's say you wrote it up there. Okay, and then, oh, well, we're not done, so you caught maybe, let's just say there, so you didn't quite catch the bottom, you almost missed a good opportunity, and then let's say you sold up here for another 40%. So that same $1,000 you made 23% on, so let's just round it off to 20%. So you made $1,200, and you rebought down here. Now you made another 28%. Let's just say around 30% off of that same 20% there, and then you sold it, and then you rebought here, and then you get the idea. So you're playing these smaller time frames much more often, more aggressively, and it can be a little bit riskier because let's say in this case here, let's say, oh, this looks like it's still going up because it's not breaking down, and let's say you bought in up here. Let me erase this. So let's say you sold up here and then you rebought here down at this little portion here, and you think it's going to keep going up, and well, it actually dumped, and you got dumped on, and you're uncertain of where this is going to recover. So now you're sitting at a 14% loss, which can wipe out a pretty amount of gains if you were compounding and making some good scalp trades. So it's riskier to do scalping. You're on much lower time frames. You're trading much more aggressively, and you're constantly having to keep an eye on the chart. And if you're charting and you understand how to do trend lines and stuff, well, you're constantly changing your chart patterns. You're looking for breakdowns. You're looking for all kinds of pattern signals to give you that edge, or to basically build your mindset. And it's like, okay, well, this is an ascending triangle. This pumped out of the ascending triangle. Oh, now we're in a downtrend. Now we're in a downtrend pattern, but it looks like we hit some accumulation. Oh, now we're in an uptrend. We're respecting our trend line here. So you're constantly having to update your chart, draw new trend lines, draw new patterns, identify new patterns as a scalper, which is perfectly fine. It can be extremely profitable, especially when you get into margin trading. You can make some really quick money really fast, but you can also lose money really fast on some bad trades as well. So that's really the difference between scalping and swing trading. And we'll get into more of that a little bit later on when we start learning technical analysis and price movements. So the first and most important thing that you want to know or learn, I guess, when you're starting out as a trader is what is your schedule. If you know that you have a busy schedule, you're a busy person, which is perfectly fine, but you still want to learn to trade in your free time to make some extra money in your free time, like a part-time job, then you want to certainly, I know that you are a swing trader. You need to look at higher time frames, weekly charts for overall trends and directions. And you don't care about all of those smaller plays like I just showed you on the hourly. You're looking at bigger picture with the intent on holding for longer periods of time. And also, and we'll get into this in later training, even as a swing trader or a scalper, it's imperative to know support and resistance zones. So even if you're checking this maybe once or twice a week or so, just to get just to check on your chart and see how everything is progressing. It's important to know where support and resistance zones and failures, so you can identify. Okay, well, we're in an uptrend. I made some money. We look like we're hitting some resistance here because these candle tops match these candle tops, and we're not breaking higher. So let me go ahead and close out my position and lock in profit and wait to see how this develops before I take another position. So that's really the difference between swing trading and scalping. It's really a time issue of yours as a trader to identify what your schedule is like and how often you can actually stare at a chart. The principles behind trading don't change whether if you're a scalper or a swing trader. Supports and resistance zones are always the same, no matter what time frame you look at. It's just a matter of the time frame that you are trading off of. All right, that's it. Pretty simple.